everyone, and welcome back to another episode of Let's Talk Real. I'm your host, Ismaine, and here with me is Kelly. Hi, Kelly. How are you?
Great. How are you?
Very good, too. I'm excited because today we have some very important news to share more publicly to everyone about you, right?
Yeah.
Yes. Excited. Do you want to share now or do you want to share later? What you thinking?
My computer just went black.
Oh, we can still see you. Good news.
You can?
Yeah.
Okay. I don't know what happened. Okay. So my news is that I'm now with Fairway Independent Mortgage, still mortgage originator for PA and Maryland. So we started on Valentine's Day was our first day. So it's been just about 2 weeks and it's been really great.
Awesome.
Trying to get over the hump with learning their systems, but
Yeah.
it's very good. So we have Ken Peterson from Fairway, who
Yes.
kind of brought us on, and my whole team is now with Fairway. So he is our guest speaker. So you could bring him in when you're ready.
There he goes. Hi, Ken.
Ken.
Hi, Kelly. Thanks for having me.
Of course. Welcome to our podcast. Can you tell us a little bit about yourself and your career?
Sure. So I've been in Lancaster a long time, but I actually grew up in New Jersey.
Okay.
I came to college here and never went home. And
That's good.
started in the mortgage industry in 1985.
Oh,
So,
my. Long time.
Yeah, so 37 years now. And all right here in Lancaster in South Central PA. And I've worked for banks. I owned a mortgage company with a couple of buddies of mine. And then in 2005, I started looking around for a new opportunity, and I'd known the CEO at Fairway from going to seminars and just meeting him. In 2006, March of 2006, almost 17 years now, we opened our branch here in Lancaster, and we've been here since, and we're very, very excited to have Kelly and her teammates join our team. So
That's awesome.
very excited. Yep.
Thank you so much for being here and telling us your story. We're very excited to see Kelly transfer to Fairway too. I think changes are always good. It can be a little roughy on the adjustment, right, Kelly, with the new systems and stuff. But
Yep. I'm getting there.
Getting there. But it's a good change overall, which is awesome. I'm very excited for you. So today, our topic, we're going to be going more in depth about, talking about Fairway Independent Mortgage as a whole, but also some topics that are more relevant to today's industry. And so you guys can kind of understand what's going on. And Ian and Kelly are going to help us answer some questions to us today. But to get started, as you guys know, we always bring up the myth of the day. And today's myth is that your down payment covers your closing costs. And a lot of people think that that's all they need, right? The down payment for whatever loan type that they're using, but that's not necessarily true. Can you guys help us understand a little bit more? Why is that not true? Why is that a myth?
Do you want to start, Ken? Or do you want me to go into it?
Oh, I think he might be frozen. You can start it then, Kelly. Maybe we'll come back.
Okay. So, with down payment and closing costs, again, it is definitely a myth. And depending on the purchase price of your home, your down payment is always contingent on that. However, you also have your costs, and those closing costs include anything that the lender charges, which usually isn't much. The charges that tend to be the majority of your closing costs are your settlement charges, and that is what the closing or abstract company charges for their title insurance and and you have title insurance. Homeowners, you have your title insurance for the lender as well as the borrower. It looks like Ken's not in anymore.
Yeah, he might be coming back. Maybe.
Okay. But so when you purchase a home in the state of PA, there is a 2% transfer tax, and the seller pays 1% and buyer pays the other 1%.
Yeah.
So if you're purchasing a $200,000 house, that's $2,000 right off the bat.
Yeah.
And then you have your title insurance, which also that insures the lender to make sure if you were to go into default, that insures them. Or no, I'm sorry, I misspoke. The title insurance is done on the property to make sure that nobody puts a lien on the property.
Correct. Yeah.
And
one thing that's important for people to know is that those fees are not necessarily something you can shop for, or is not something you can get away with by going with different companies. That's set by the state. The title insurance is actually the amount charged is set by the state based on the purchase price. So that is something that is not like, oh, I'm going to use this person instead of this person because I'm going to get a better deal. In that case, it's not the case. It's set by the state. You always pay the same amount based on the purchase price.
Yep. So no matter where you go, that title insurance isn't going to change.
Yeah.
Maybe, did he think that we were done? Did he log out?
No, I don't think so. He looks like he actually froze. So.
Oh. Okay.
Might have logged off.
That's so weird, because since I've been here, I don't freeze anymore.
That is true.
My service has been better since I've been here.
Yeah. So do you think we can text him just to let him know to come back? And then I'll keep talking while you do that. So basically a lot of people think that the down payment will cover those costs that we're breaking it down to you guys, but it really doesn't. So the down payment is really a requirement by the loan you have, and every loan type will require a different down payment. But that is just separate from any closing costs you have. So your down payment does not cover closing costs. So let's say you have a conventional 3% down payment loan, which they do exist. They don't have to be 20%. That 3% is a requirement for that loan type, plus your closing costs. So you'd have probably on average between, let's say 3 to 5, maybe sometimes even 7% closing costs. And then you also have whatever percentage is required for your loan type. So don't think that the loan type covers your closing costs, because that's definitely a big myth. You do have to prepare yourself for a purchase. There's definitely programs, which we have spoke to you guys in different episodes, for first-time home buyer grants, different assistance programs available in the counties, surrounding Central PA. But you do need to save for your closing costs overall, plus your down payment. So that's just to make that misconception no longer a myth. Hopefully that kind of explains to you guys that. Did you hear from him to see if he's going to be?
No.
He might be trying to get back on the computer then.
Yeah, that happened. But my computer keeps going black.
Really?
Yeah, I don't know why.
I see you perfect, and you're not lagging at all. So if it's black for you, it's good here.
Yeah, I sent him a text, so I don't know. I mean, he's off because he shut his door to get on the podcast. So
there he is. Hello, welcome back! Yay!
My whole thing froze. I just shut down. I apologize.
No, you're good. It's technology, right?
Well, my computer keeps going black, so
it's Monday.
Who knows?
It happens.
Who knows?
It's all good.
All right.
So let's get to the questions then. We're gonna fire it up here towards Ken, and Kelly can also help him with some of those questions too. But we're gonna fire it away, and then hopefully Ken can clarify a lot of these things for us and for you guys listening here too. Okay, Kelly.
All right. Well, I would start with question 2, because we already kind of went over question 1.
For sure.
So Ken, what sets Fairway apart from other mortgage providers?
Yeah, that's a good question. I think it's a combination of factors, and um, it all boils down to the people involved and how Fairway was built. It was built by a mortgage originator. We're an independent firm. A lot of people haven't heard of Fairway, but we're what I like to call, we're really big, and at the same time we're really good. So we're one of the largest lenders in the country. We're the number one FA purchase lender, the number one USDA purchase, with us having a wide array.
We're losing him a lot.
99% of our office here.
Yeah, and I think we're losing you quite a bit, so it's kind of hard to hear you right now, unfortunately.
Yes, sir.
Yeah, it's gonna be hard to understand it. I'm having a hard time.
Yeah.
Yeah, it's very odd because I'm
So
literally
we are.
sitting.
Should I keep talking or?
Yeah, I'm not sure because it's kind of hard to it's cutting up so much that I'm not even picking up what you're saying. And you guys are in the same place, which is funny.
I know, it's very odd.
Maybe Ken, do you want to restart your computer? Maybe reset all the things and see if it works out.
Maybe he can just come in here with me.
Oh, yeah, that would be great because you have
And
good
talk.
internet. Yeah,
That would be easier. Why don't you come in the conference room, Ken, and
you guys can do it together. Yeah,
just be together?
Yeah, we're moving here. I think that would be much better because your internet's perfect today, Kelly. It's running
I know,
great.
it's weird. It's so bizarre.
See, we have technical problems. It happens. Meanwhile, we're listening to Bossa Nova.
Yeah, my house.
Because you know me,
So
I like me some Bossa Nova.
this keeps happening. There we go. All right.
There he goes.
I don't need to be on the camera.
Yeah, you guys keep swapping back and forth, maybe. I think we heard up until the point that you're saying it really comes down to people and how Fairway was built. But then after that, it kind of got broken down. So if you want to kind of go back to that.
Yes. So what sets Fairway apart? You started talking about the people and how I got started. Started with the mortgage originator, and it's all you.
So Fairway was started almost 28 years ago now by a mortgage originator. So it's a company that was built by an originator and built up to help support the originator and the branch network. And a lot of people don't know Fairway, but I like to say we're a big and small company. So we get the advantages of being big. We're one of the top 5, top 7 lenders in the U.S. We're the top FHA purchase lender in the U.S., top USDA lender, top 5 VA lenders in the country. So we do a lot of different loan programs. So we have a big array of products, which is really good for the originators. And more importantly, really good benefit for our buyers because we're able to help more buyers. Instead of squeezing them into a box, we're able to help customize a mortgage product for them because we have more products available for them.
Mm-hmm.
But we're also very small, and I say that because almost all of our work is done right by our staff here in Lancaster. We process, we underwrite, we close all of our own files. We don't have to wait for corporate to do this or to do that. We can move very fast. So we get the advantages of being big, but the advantages of being small, which is local, which is really, really important today.
Very
we're local
important.
in our markets, and we're very fast and very nimble.
Awesome. Well, that does make a difference. And I always tell my clients when they're looking to talk to different lenders that stay away from the big guys, mainly because, you have to deal with the corporate and process can be done to and communication can be lost in the middle. And that's one of the biggest advantages working with someone local like Fairway. But yeah, you guys can offer the big guys advantage as well, having many different products, which is great. So the next question would be, how has the pandemic impacted the mortgage industry in your opinion, and what changes have you seen in the past year so far?
Yeah, so the 2021 was an interesting year, and everybody thought the pandemic was going to kill the real estate market. For several months, realtors couldn't do open houses. People had to wear masks and gloves and booties just to go into a house.
Yeah.
It was a major shift in how everybody did business for several months.
Yeah.
The pandemic hit in March of that year, and literally within 60 days, home sales started to increase. And what happened was the Federal Reserve started lowering interest rates really, really fast to help the housing market get back on its feet, because the government knows the housing market is one of the biggest factors regarding the U.S. economy, and it's something they can control. And they wanted to get the economy back on its feet because everything shut down from the pandemic. So interest rates came way down, and all of a sudden we had 3% interest rates.
Great.
And, really big demand. So home sales actually took off. It surprised everyone, but home sales took off, and we were operating in a different type of style for a while. We couldn't meet our clients. We couldn't, just the whole way of doing business changed dramatically.
Yeah.
But home sales actually improved and stayed very steady through 2020. 2021 was a very frantic pace because we had huge demand because the interest rates were so low. We have a very big millennial demographic that was entering first-time homebuyer stage, so there was huge demand and fairly tight inventory. So the market was like this.
Yeah.
Until the very end of 2022, and then February, March of end of 2021.
Yeah.
And then February and March of 2022, interest rates started going back up, and they actually went up very rapidly. They almost doubled in a matter of 3 months. It was the fastest interest rate increase the country's ever seen, and it really quieted the market down and slowed home sales. So, and now we're just working back into what we would call a more normal market. We still have low inventory, but people are getting more and more comfortable with the interest rate scenario and are coming back into the market again.
Awesome. Yeah, no, that really does break it down. We did see some crazy couple last 2 years for sure.
Yeah, it was a pace. It was hard to be a buyer because you had no time to go see a house a second time. If you liked it, you had to put an offer in, and you had to go. And
yeah, I mean, I bought my house in 2005. I was a loan officer, and our realtor at the time, I would go look at houses with him, and if I liked it, because I knew what we were looking for, then he could schedule another showing, and then even another showing for us to do kind of like, are we 100% sure we want that house? And we saw several houses a couple times before we decided on our house. That market still really doesn't exist.
No, you're not able to do that anymore. Or some clients of mine that would say like, oh, I'm not available today. I'm only can do it like this coming weekend. I'm like, oh, guess what? Houses are going to be done by tomorrow. Like,
right.
It was kind of chaotic, and the amount of competing offers, the creative ways of making your offer be stronger and compete against the others, and all the cash buyers that came from nowhere in the past couple of years is also something that was kind of surprising to everyone. I think everybody was emptying their 401ks to buy a house and try to be competitive. So it was definitely crazy. I'm gonna say probably we are not in that crazy stage anymore. It is still somewhat competitive, yes, because we still get a good shortage in inventory, but not as crazy. I think that's the biggest difference. So, like, we have to take advantage while we can, I guess, for this market. You can go ahead, Kelly. You have the next question, right?
So the next, are we on question 4?
Yes. Yeah.
Okay. So what advice would you give first-time home buyers today?
I think first-time home buyers, and I want to go back to something you said. Yeah, the market has changed a lot with interest rates going up, and in our South Central PA market, the average length of time a house is on the market is moved up to 25 days, which is the longest we've seen. Buyers are getting an opportunity to see a house once, maybe take a little bit of time to get ready, but it's so important for first-time home buyers to be prepared, to get really good education from their lender and from their realtor. And that's why advice from people like you and great originators like Kelly is so important, because you can't just, some people jump in, but they're the ones that run into issues or don't understand the process.
Yeah.
And I try to tell people, if you're thinking about buying a house in the next 3, 6, 9, 12 months, start now. Get your ducks in a row, get pre-qualified, get pre-approved, know what documentation you're going to need, how much money you're going to need, what kind of budget you're going to look at, so you can get a real good feel for how the market is moving, so you understand the pace that's going on. You understand that you got to have the money in the bank today. It's not something you can really save for.
Yeah.
But most importantly, it's having that pre-approval letter from a good local reputable lender, so that realtors will take you seriously. And when you go to make an offer, they'll take you seriously, because every realtor in town and every lender in town has seen out-of-town pre-approval letters, or from some of these unknown online lenders that aren't valid pre-approval letters, and sellers won't take them seriously. And you're sitting at the bottom of the pile when there's very possibly 1 or 2 or 3 offers being made, and your offer just goes to the bottom. Unfortunately, I'm not saying it's right or wrong, but that logo on the letter means a lot today.
Means a lot. And thanks for bringing that up, because we do run into that situation a lot with my clients when they come in with their own approval that they will be taking online for some online company, which I'm not going to mention the names, but there are so many out there. And then when they bring that offer in, it doesn't matter if the offer is great. Sometimes if it's so close, it comes down to where they approved from. Can we rely on this lender? And if the answer is no, there it goes. You're down back to the bottom again. So thanks for bringing that up, because a lot of people don't understand the pre-approval has multiple reasons why we need it. First of all, knowledge, right? Being prepared, know exactly what you can afford, how much your monthly payment's going to be, so you can, make wise decisions when choosing a home. But also, the reputation from your lender is very, very important as well. So thanks for bringing that up. Okay, so next question. What are some common misconceptions that people have about getting a mortgage, and how they can be addressed?
I'll go back to my last statement. The educational process for especially first-time home buyers, but even move-up buyers, because the process has changed. The speed of the market has changed dramatically. Yeah. So even if you bought a house before the Great Depression or after the Great Depression, things have changed a good bit. So education is huge. Yeah. The 3 big misconceptions are, number 1, I have to have great credit. And you have to have okay credit. But people always say, well, how low do your scores go? And there's so many factors that go into an approval besides just credit score. But people with scores in the low 600s and even high 500s oftentimes are able to buy a house. And if you have lower credit scores, lots of times we're able to help you get your scores up. So one more reason not to wait to go see your lender, because if you have a 575, we might be able to get you to 600 or 6 house, but you see a nice house you like, you're not pre-qualified to go get pre-qualified. All of a sudden you find out your score is low because of an error or a mistake, but or a little issue that we can help you fix, but you may not have time to. So number one, you don't have to have perfect credit to qualify. Number two, you do not need a large down payment. A lot of people think you need 10 to 20% down payment, and we have no down payment loan programs available, low down payment loan programs available, and even down payment and closing cost assistance loans to help people get into a house with very low cash out of pocket. Those are two of the big misconceptions. And the last one, Yasmin, is a lot of people just don't think they can buy a house. And lots of times they can.
Yes.
Because we don't need perfect credit, and you can get into a house with not a whole lot of money. You do need some money.
Yes, they need some.
Can we do some miracles sometimes? Yes, because there were times that we were able to get people in houses with like almost no money out of pocket. But it depends on the situation, depends on the house, and depends on the person. So it's possible, yes, but you do have to prepare. The more prepared you are, the better you position yourself to purchase a home. So.
And that's why that education is so important, Yasmin. I go back to education, and getting a good consultant. So many people get approved online and never have real conversations with a lender. They don't know what happens next. They don't know this. They don't know that. And they don't understand the process. And getting in with a good lender that's going to educate you on here's what happens next. Here's why this loan program is better than that loan program. Here's a no down payment program you qualify for, a down payment assistance. A lot of out-of-state lenders don't even have these programs available. So that locality, the local lender, just gets really, really important.
So important. And also, a lot of people come like, oh, my aunt got this, or my cousin got that. And people need to understand that everybody has, it's like your DNA. You have your own profile, financial profile. So everybody's going to be in a different situation. And what worked for someone else might not work for you, or you may be able to qualify for something that they couldn't. So don't assume that what you know from other people is what you are going to be getting, because you could be getting more or less, right? So that's why education is so important, and getting started early. If you want to buy a house tomorrow, you should definitely be talking to a lender a month ago.
Correct.
Yes, because it's huge. Yeah.
So the next thing, and we try to stress this like in every call, or every podcast, but
yes,
can you try and explain why it is so important for somebody to have a pre-approval in their hands when they decide they want to go look at houses?
For me, it's really easy. I want to go see a house. A Sunday, you can go see every open house on a Sunday that you want. But if you want to go back to view a house, to be able to make an offer, you need the realtors to understand that you're qualified to buy the house. Because you don't know it, but you're taking the realtor's time, their professional time, their working time to go see a house, which could be hours of prep, travel, and expense time, only to find out that you don't even qualify. And today, most good realtors aren't going to show you, and most listing agents won't let you win the house without a pre-approval letter. You're going to see a house you love online, you want to go see it, and most realtors are going to say, you got to get a pre-approval. I can't set up a listing showing. I can't show up a showing with the listing agent without a pre-approval letter. You're going to miss the house of your dreams, because it's going to take you half a day or 3 days to get your pre-approval letter done. So, and you very literally could be shopping or looking for a house in the wrong price range also. So it's a matter of legitimizing yourself and your ability to be able to buy a house in exchange for using your realtor's professional time to go see that house and get ready to make an offer.
Yeah. Thanks for pointing that out, because we always talk about the pre-approved and why you need it, but we never mentioned that specific point that you just made, that someone not qualified or not pre-approved yet wanting to see a house is really not necessarily a waste of the realtor time, but in a way it's just you're jumping the hoops, right? You're not doing the things in the right order, because especially in today's market, chances that the house you saw might not be available a day or two later. And if you're going to need that day or two to even get your pre-approval, right there, that house is out of the picture. So it was a waste of time for both the buyer and the agent. So it is so important to be ready. And one thing that I hear sometimes when personally I talk to a new client that is not yet pre-approved, sometimes there's a little bit of a pride, and I don't mean to say, oh, I want to make sure you are pre-approved to see you're a legit buyer, because sometimes they take it that way, right? It's like a pride thing. No, I can get a pre-approval, no problem. Like, that's not what we're saying. What we're saying is that you need to be prepared, not because I don't think you can qualify, not because I don't think you have the funds or the means, not because of anything. I cannot assume anything, good or bad, which means you need to give me proof that you can, right? So it's just there's a lot of misconceptions there, and a lot of like set thoughts that are already preset for people that they don't understand why they should or should not have it. So yeah. Alrighty. So the next question: how does the current state of the economy impact mortgage rates as of today, and what do you see in the near future for rates?
The interest rates are, it's something that we really don't control, right? They go up and down just like the price of a good company stock.
Yeah.
As the company does better, the stock price does better. And when they're not doing so good, the price goes down. And it's the same with the economy and interest rates. When the pandemic hit, we'll go back to the pandemic question. The government thought that, and a part of it did, that the economy was just going to sink and go like to nothing. So they lowered interest rates to help people be able to afford homes and keep the economy moving. But as we came out of the pandemic, the need for those low interest rates wasn't necessary. So the Federal Reserve has started to increase interest rates, and we're going to a more market neutral interest rate, which is interest rates are just controlled by the market, not by the federal government. During the pandemic, the federal government was spending $40 billion a month to buy interest rates lower. That was just unsustainable. So now we're in a neutral market interest rate environment.
Yeah.
Short term, we think they're going to stay about where they are. But if you look out a little farther into 2023 and 2024, most the large lenders we work with, the Mortgage Bankers Association, the National Association of Realtors, almost all of them feel we're going to see interest rates back into the mid fives and even low fives later this year and into 2024.
Awesome. So basically going back to what we used to see in 2019, right before the COVID started.
Yeah, sort of normal.
Yeah.
There are some, I should mention though, there are some, for some people that qualify, there are some interest rates available in the fives today for some first-time home buyers that qualify for some of these special products that some of the local lenders do have available. So there is great options available. Interest rates aren't nearly as high as what a lot of people think they are.
Yeah. And that's, once again, why it's so important to educate yourself and prepare ahead of time. Because if you do qualify for that, you can forget about what you see in the news. It's what you're getting. It's what matters.
Right.
And again, a lot of people they see that we were on the threes and low fours for the COVID period, but they have to understand that was a once in a time thing. It's a big event that caused that to happen. But that's not there's no foreseeable future as of now that we're going to be seeing those numbers again, anytime soon. So if they're just waiting to buy a house, waiting for the threes to come back, you're never going to buy a house, or maybe you're going to have to wait for the next COVID to happen, which hopefully doesn't. So,
and the problem with waiting, Yasmin, is this: we have a very low supply of homes available for sale.
yeah,
As demand increases, even with interest rates going down a little bit, demand will increase, and those home prices will stay the same, or even go up higher. So you wait for lower interest rates, but home prices go up, and it's a losing battle. So you're better off buying now. And if rates go down, you can look to refinance or restructure your mortgage in the future interest rate. But
correct.
Waiting for lower interest rates is a losing battle.
Yeah. And I really try to educate my borrowers on that when somebody has a question about the interest rates. And I'm like, you explained it really well. And, they went down so quickly, but they also went up so quickly. They nearly doubled in only a few months. And it was really hard for people to swallow. And I always tell people, like, right now is a normal rate environment. So yes, it might bump out a couple first-time home buyers, but then that just means they need to sit back and take a look at themselves and what they fit into.
Yeah.
But that's what they have us for, to help them with that process. If they're not there, then I can give them the steps to get there eventually. So,
correct.
But it's just all the different factors go into play. But education is so important. And I try to be the educator, regardless of whether I get the loan or not.
Yeah.
I'd be richer, I guess, if I wasn't that way, but I'm not.
No, our end goal is to help our clients the best we can. It's not about the sale; it's about getting them ready for it, to fulfill that American dream, which is to buy a house. And we do work with a lot of first-time home buyers, and that's why education is so important. If you're even thinking about it, maybe even if it's not now, but you're thinking about it in the next year, it's better to talk to someone now and get starting on preparing yourself to get there next year. Or you might find out that you can buy now and just buy it already. So you never know. But it's
might get surprised.
Yes, a lot of people actually that talked to me and bought a house didn't think they could buy a house by now. They were just talking to me just to see, how would it be, and now they're in the house. So you never know. And talking to me and Kelly will help. That's why we created this podcast. It's just really a way of, introducing knowledge about real estate to everybody that watches this, and really try to bring some awareness of this, kind of misconceptions that people have about buying real estate in general. Okay. Was it next me, Kelly? Yeah, right?
Sure.
Yeah. Okay, so what are some key factors that mortgage lenders consider when evaluating a borrower's credit worthiness?
Yeah, they're all good questions, Yasmin, but I go back to the education. Credit worthiness isn't just a credit score. It's not just a job and your income. It's not your car loans or student loans. It's all that combined. And the old rule of thumb was the 4 C's, and credit, your credit score. We do have credit score guidelines on every program. You do not need perfect credit, but we need to know what the credit is, your payment history, and what those scores are, so we can get you into the right programs or help you get those scores up so you do fit into the right programs. So credit scores, cash, how much money do you have available? How much can you save in the next 30 days or 90 days or 6 months or a year, depending on your time frame? Because you do need money to get through a real estate transaction, even with no down payment loans and down payment assistance. You have to have some money to write a contract. You got to have money to order an appraisal. You just need money to get in. So we want to see the property you're buying is fair and marketable, right? So collateral is important, your credit worthiness, and that's sort of on the other end. Once you make an offer, does the house qualify even for most lending guidelines? And then your qualifications, your income. We are looking at your income in relation to the new payment, and we're looking at your income in relation to your new home payment and your current monthly obligations. And lots of times we're able to help people restructure their obligations or pay off their obligations so they can qualify for the house that they want, so that getting in early so that you have time to work through the process and get a real good understanding of how everything fits is so important.
Yeah. And again, going back to knowledge, right? Sometimes people think they have to pay off everything they have here to be able to buy a house. And that's actually not always the case. And it could actually jeopardize their ability to buy too.
Right.
They don't have no debt, or, maybe they have a credit card. They don't necessarily have to pay off to zero. They might have to pay off to $131 specifically, which I've seen that happen. So talking to someone like Kelly, they can really figure out what needs to happen, right, in order to be able to qualify. So there's a lot more to being able to qualify than people think. Yeah.
So
Kelly, leave it up to you. I think you have the last question. Yay.
Yep. What should home buyers look for when selecting a mortgage lender, and how can they ensure that, I can't read my handwriting, that they are getting the best deal?
So to me, the best deal, I'll sort of work backwards. The best deal is really a combination of, a lot of people say, hey, what are your rates? They're always looking for the best interest rate. But sometimes the best interest rate in the wrong program is not the most affordable and not the best deal. So I think the best deal are very fair, very competitive interest rates. More importantly, making sure you're in the right product, right program that's structured well for that home buyer today, because every home buyer has different situations, different today, and it'll be different tomorrow. So we want to help people customize their mortgage program so it fits them today and works for them tomorrow. So that to me is the best deal, getting the right product, well structured, that fits me. Selecting a mortgage company, you want availability. And I'm not saying 24/7, but during the day, early evenings, being able to reach somebody Saturday mornings if they need to. Being available is really important. Even more important than being available, some of our clients spend 3 months, 6 months, 12 months, 24 months going through the home buying process. Not everybody gets a house like that, especially over the last few years. So do you like the person you're working with, right? Are they answering your calls, answering your texts, responding? Are they professional? Are they giving you the right education? Or are they just sending you emails with no follow-up? So I think liking, respecting, and being comfortable with your lender is number one. Are they local? I really think that's very, very important today, because I know sellers and listing agents look at that logo on the pre-approval letter.
Huge,
Local, friendly, knowledgeable, experienced, so that they know what programs you're going to fit best into and know how to structure that with rates, with points, with down payment assistance. All those little things that go into a well-structured mortgage all become very important. But you're going to be spending some time with this person, just like your realtor. You want to like them, right? You want to know who they are. You want to be comfortable. You want them available, and you want to make sure they know the market. So those are keys to me.
Yes, no, and I agree with every single one of them, especially on the realtor perspective too, because when we have a good lender working with that buyer, it makes my job so much easier too, because if I'm able to contact and communicate with that person, I think communication is key, if not number one, almost together right there with experience, right? Because we definitely want to have someone that is knowledgeable.
You said something there that's very important. This real estate transaction, it's not just a buyer and a realtor. It's a buyer, it's a realtor, it's a lender, it's a title company, it's a seller, it's a listing agent, there's a home insurance agent. And you're starting to talk about more than just one person. You're really talking about a team. And the more that team knows each other, is comfortable, knows how everybody works, it's no different than a great team in sports, right? It's like a well-oiled machine.
We have one of those.
We do. We have our 18.
And Leslie, the four of us.
It's too powerful for the home buyer not to work with that team because everything gels, everything's together, everything's smooth. It's a much easier transaction. When you hear about buyers that have horror stories buying a house, it's, you know, they're pulling pieces from here and there and here and there, and it's not well structured by a team lead like someone like yourself, Yasmin. It's, you know, it's
very true.
It's really not just one person's fault. It's just you have too many people not playing the team game, and bad things happen.
Oh yeah, and we see that unfortunately more often than not. Especially like when I am on the seller side, representing a seller on a listing, and then you see a very disgruntled set of individuals, all maybe great on their own, but not working together. That can really ruin a deal. So it's sometimes not just about the buyer, not just about the seller or the property. It's really who is representing who in the deal, right? So very, very important. Well, I think that's
last week, or we didn't do our recap, but last week we had Bill on, Bill Brennan.
Yes, we did. Yes,
and he went. Yeah, he's our favorite, but he did really well. He answered a lot of good questions, but people forget that they need homeowners insurance. I'm like, well, you have renter's insurance, right? I hope. You know,
I hope they have.
Yeah. So, but yeah, that I don't remember what our myth was last week, but people, they don't even think about homeowners insurance. So yeah, yes, you have your title insurance, but homeowners is just as important.
Very important, yeah. And it is mandatory to have. A lot of people don't know about that, but you do have to have when you're using a mortgage, and you do want to. That's one of the things that you are able to shop around, but you do want to make sure you are working with someone that you also, again, can talk to and report to and reach out to at any time if you have a problem. Because let's point it out, like if something happens on your home, you want someone that's very available to talk to in case.
Bill's always working.
He's always working. Unfortunately, poor thing. I don't think his wife liked that so much, but
you know, the insurance. You know, when you talk about the best deal, I can go online and I can always find a cheaper policy.
Oh yeah.
But I don't always know what I'm buying. I don't know if I have the right coverage, right? I don't know if I have the right amount of coverage, or my toys, or my artwork, or my kids' musical instruments. Are they all covered in this or not? And that's why you need a great lender, but also a great insurance person to make sure you are properly covered. Make sure the largest asset you have, your house, you want to make sure it's covered properly in case something unfortunate happens to you. So,
exactly. Like your house getting struck by lightning, like mine did.
Lightning, fire, floods, water damage, all those things that can happen to homes.
Yeah, we got lucky that our house didn't catch on fire when it was struck, but it was struck.
This is crazy, right?
So, yeah.
What are the chances of that happening? Well, I think
good because it's me.
The questions like that today. Do you have anything else, Kelly, that you would like to point it out to today?
I don't think so. I think it was really good. We went over a lot of stuff, overlapped a little bit, but even with overlapping, it still brought up other things. So thank you very much for doing this.
Thank you for attending here with us today and answering our questions. Everything was very great. I think you really brought up some different insights and different takes on topics that we even probably already covered in some episodes, but you know, it's just always good to hear from someone that is so knowledgeable and has so much experience in the industry.
Yeah. Yes.
I think this is a great forum for you to do exactly what really good professionals do, which is teach the market about buying a house, because it really just isn't as simple as some people think, and you don't learn about this in school. So getting this great education, I think this is a wonderful resource that you provide to consumers in your marketplace.
Thank
you. Yeah, we're excited to be able to do this and do much more coming up. I know Kelly and I are prepping something special for you guys. We're going to be hosting a live webinar for buyers. We'll give you guys some more details maybe on our next podcast, but that's coming up soon. So we're very excited to do our first one, many more to come.
Yep, I'm going to be a PHFA pro soon.
So we're going to do a whole episode just for PHFA because I know Kelly's very excited about that.
Yes,
And
I'm working on one right now that I'm learning. So I'm going to be a pro in a lot of these products because I want to know them all, but I have to take my time. So
yes. It's exciting. At least now you have so much more to offer to all of our clients, and I'm really excited that you can. So this move was really one of the best for you at this point. So I'm happy for you, and I'm happy that you're working with Ken because Ken is great. Thank you so much for being here today.
Yep.
Awesome.
Thank you. Yeah.
Thank you.
Yep.
And that's it, guys. Have a good one. We'll see you next Monday. Bye.
See ya.